Так, Альфа Директ. Сейчас надо подождать 11, чтобы по-хорошему бы 12, конечно. Когда реально закроются торги. que uwielbia. Так, 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 так. Оп, оп, оп. Блять, наверное, надо включить RTX. Блять, забанят за этот эмбиент. Оп, 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 силовичок. Бада-бада-бада-бада. Четыре битка, кто-то по 18 штук купил. Оп, 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 силовичок. Бада-бада-бада-бада. Здорово. Видал, чего? 88% угадал. Ну, это 8 вечера было. Какое именно? Тут про эту соплю. А она сейчас у всех почти такая. Ну это этот. Exxon Mobil. Да какая пара? Это. Это акции. Оп, 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 силовичок. Бада-бада-бада-бада. Ну, красота, если знать, что так будет, и зайти в шорт. А то я зашел в шорт. Сейчас покажу. Шорт побери. Минус 45 тысяч. Зашел я. Я зашел, блядь. Прикольно, сколько я же в шорте сижу. Охуеть. Зашел я где-то здесь. Ну, где-то вот здесь, короче. Такой думаю, ну он же, блядь, уже почти максимум. А он как попер вверх. Я такой думаю, ну, блядь, я подожду, может он упадет. И вот здесь вот вечером я сидел и думал. У меня было минус 20, по-моему, тысяч было. Такой думаю, может, ну нахер. Что-то так растет и растет, может еще и дальше будет расти. Я такой думал, может это, ну, закрыть позицию и как бы, ну, купить в лонг. Потом думаю, да ну, куда еще может расти, блядь. А он на следующий день никак хуйнул. И если бы я так сделал, я бы, блядь, и эти 20 отыграл, еще бы плюс 10 получилось. А тут бы еще бы плюс 20. А в итоге сижу, продолжаю, блядь, что-то ждать. А оно что-то как-то не очень. И в Шеврон тоже зашел. На новостях, что нефть в минус ушла. Такой думаю, ну, блядь, нефть в минус ушла, наверное, нефтяные компании в жопе все будут. И зашел в шорт. И оно тоже что-то как-то это... Как поперло. Блять, с чего? Бля, я вообще не понимаю. Но это я без теханализа все это делал, по наитию. Сейчас сижу, пока вот жду, пока чуть произойдет. Решил заняться теханализом. И вот если бы я был... А сейчас мы пойдем посмотрим, блядь. Где там мой шорт был? Он покажет, нет? Но он сейчас упал, в принципе. Довольно сильно, кстати. А сейчас мы его глянем. Погоди. Ой, блядь, как он там правильно обзывается? Какой у него тикер? Тикет. Тикер, блядь, как правильно? Он же, похоже, перекупленный какой-то. У него не говорящий какой-то тикер. Да подожди, давай посмотрим. Блять, народ там работает еще, охуеть. А, XCOM. XCOM. Ну, блядь, вот такое ощущение, что можно еще чуть-чуть подождать. Потому что вот на дневном графике он как-то разворот тенденции пошел. И здесь он как-то блядь, мне кажется, он еще упадет. Ну или можно так купить там наполовину или на треть и поставить где-нибудь, блядь, здесь еще один заявочку. Ну или сидеть ждать, пока там это будет, оно вниз не будет. Так, по теханализу давай посмотрим. Так, а когда я его купил, а? Он не показывает, когда я купил. Иксы я хуй знает. Ну если только в течение года можно иксы собрать, а так иксы это он на криптовалюте, и то надо знать. Ну, то есть это какие-то блядь, неизвестные эти альткоины, которые стреляют периодически по иксам. Когда я его купил? Ну, историю не показывает. Ну-ка, покажи мне историю. Входная стоимость есть. А когда был вход? Ага, сонда. Ой, ну короче, я смотрел, когда только начал вот линии, ты посмотрел, по теханализу получалось, что не стоило заходить в шорт, а я зашел. Ой, так, ну чё, посмотрим, чё как, прогнозы утренние. Сделаем срез. Блять, это бы все автоматизировать, конечно. Минус 0.12. Так, а чё ты не считаешь? Ночь. Интересно, подхватит, нет? Ну показывай формулу мне, блядь. А, я телек хотел включить. Что-нибудь из телека. Так, ну, Bloomberg покажет мне, нет? Bloomberg.com. Понятно, это был не Bloomberg. Нахуй ты мне Европу показываешь? Есть YouTube, ну-ка.
Liftoff. We have a liftoff.
It's interesting.
Блин, я залогиненный. Так, а давай тогда не здесь. Так, Ютубе. По-русски, блять, охуенно. Зачем мне по-русски пишет?
If you manage a team, you should be using Monday.com. It's a platform to manage any team and any project.
And can you give us more detail on your vision?
I'm sorry, on my vision of what?
Cooperation as we come out of the other side of this.
Well, I don't think anybody can have a vision yet until we know how we're going to come out on the other side of it and how much damage there will be. And that in turn depends on the policies of many, many countries.
Right, so how are we expected to work together when we're still solving the problem in our respective homes?
Well, that, of course, is the big issue, because if we don't work
Такие
together,
странные
the problem
ведущие.
is going to be much bigger and the outcome much
Блять,
worse
куда его
than if we
засунуть?
do. Obviously, given how contagious the virus is, it's not going to be possible to have some parts
Давай,
of the world virus-free
возвращайся.
and not have them at risk from other people from other parts of the world. It
Так
just
что,
can't
он
happen.
есть на Кракене?
So, Anne, if you were able to get some
Kraken, это
policies
же
into action now, what would be the top one or two
криптобиржа.
that you would want to see carried out?
Well, I think it's very important very quickly to get an agreement on free trade in medical supplies, both the kit and the medical goods themselves, the personal protective equipment, and otherwise to make sure that all countries share in it and have some an organization, I would guess the World Health Organization, take some degree of responsibility for making sure that the supplies get where they are needed.
What are the international organizations doing to help? I mean, I suppose my question is, are they doing enough? I'm talking about the IMF, the World Bank, or has it been left to the central banks and the fiscal authorities to do the work?
Well, there are several kinds of work that have to be done. The first and most important kind is to first contain and then contain the virus until such time as we get a vaccine or otherwise can eliminate it. And that's not a job for the IMF no matter what. It's really a job that's going to have to be done with coordination among governments, and the World Health Organization is the obvious candidate. Now, the IMF is doing a lot by way of lending money, but that money doesn't help very much insofar as it can't go to provide all of the medical supplies and things like that. And we are in some danger of just having a bidding war for what there is, or worse yet, having the countries that produce things keep them all for themselves.
And is there going to be a turn inwards? A lot of experts are saying that supply chains have been so affected and there was such danger attached to the international supply chain that countries will now look to source everything within their borders. Do you see that happening, and is it okay if that happens?
Well, it's certainly not okay, and it's certainly something, but it's unfortunately certainly a very real possibility, given the lack of ability so far to coordinate our response in a sensible way, and given that many countries already have been putting restrictions on exports of medical supplies and the personal protective equipment. So, yes, it's a danger, and it's, I think, a danger that will hurt us all. As to supply chains, I think it's long, at least companies I've known enough to know what they do, it's long been the case that every company knew better than to have only one supplier of something, and I'm surprised at how much of that has actually happened. But on the other hand, I don't see the elimination of global value chains or anything like that. Some degree of recognition that there was only one source of supply, and that that's a problem. Whether the risk is because of a typhoon or whether the risk is because of pandemic, there still needs to be multiple sourcing, but that's not the same thing as saying you have to get rid of supply chain.
Do you know what this is? Because believe it or not, this weird little blue tool actually sells thousands of units right here on Amazon for $19.99. You can buy them right here for $1.97 per unit. And with over 82% of households having an active Prime membership, can you guess what this little bad boy makes every single month selling on Amazon? Well, if we pull up data from Amazon, you can see right here that this little blue tool sells over 12,000 units every single month on Amazon. So you buy them for $1.97 and you sell them for $19.99. And it sells over 12,000 units per month. Now, I'm not a mathematician, but that sounds pretty awesome. And the best part is, this is just one product, and there's actually over 12 million products sold on Amazon, and over 50% of those products are sold by third-party sellers just like you and me. And I know
Chairman Jay Powell seemingly put to bed the idea of negative interest rates, but the president is going to hammer that home, we know. Is there a chance we do see negative rates in the US?
Well, you know, I certainly hope not. I was relieved and not surprised by Chairman Powell's comments. I mean, negative rates are destructive to the first principle of capitalism. I mean, it's a terrible idea. He was very gentle about it, but he said it hasn't really worked in other places. You don't have to look far. Japan, Germany, where this idea is not a good one. It's just insane. I mean, the idea that, okay, you know, here, borrow money and I'll pay you for it is just fundamentally wrong. And, you know, you have a lot of academics discussing it, but it makes no sense on Main Street. And it is a very scary proposition that has never proven to work well anywhere, and I couldn't be more against it. And I don't think the chairman will be swayed by it at all. He's got an arsenal. He'll deal with it, and the Fed will do everything it can, you know, through this crisis, which is really a crisis.
Even with rates as low as they are, though, Jimmy, never mind going negative, they're already sort of razor thin above zero. How are banks, boutique investment banks, and the regionals faring?
Well, banks are really challenged at this point in time because, as you point out, it's bad enough as it is. We have a flat, very low interest rate environment, and obviously a positively sloped yield curve is where a bank can really perform the best. So they're going to be challenged from their income statement on basically where low rates are and have been, and it has been further accentuated. If it was to go negative, then, you know, it would be just disastrous, really, in my opinion. But the other reality is we don't know for how long and how deep and how problematic this is going to be, but we know it's going to be bad. And the reality of it is, unlike 08, everybody keeps referring to 08, this has nothing to do with 08. You know, 08 was created because there was too much credit, too much of an extension of credit, and not just the banks, but other lenders were really at the core and caused the problem by this excess credit. This is just the opposite. The banks very well may be a path out and a solution to the problem. It's just that it's going to be a deep slog. And the fact that you can lose, I don't know what the number is, 20 to 40 million people for a period of time, you can pay them more where they don't work, that's just not a constructive environment. And it's you know, the bank stocks obviously have suffered dramatically. You know, I'm a great believer that you buy banks below book and you sell them at 2.5 times book. It's a strategy that's worked for a long time. The issue now is what is book, and obviously I think there are real values in the banks themselves. I'm not going to name which ones, but I think there are values. It's just that you've got to reacquaint yourself to that may be the real book, and it isn't the idea that 70% book, so boy, they're going to go back to book. That's not the case. I think the reality of it is this is going to be a very difficult slog, and I think the banks can be part of the solution to get out of it, frankly.
Well, let's try and figure out what banks you're talking about from some other clues, Jimmy. Obviously, the last time we spoke to you was the consummation of the Piper-Sandler deal. Since then, in the general sphere, we've had the massive BB&T SunTrust deal. But will there be another round of consolidation in weeks and months to come? When do you see it happening?
There will be. It has been going on really since '78, when I first started in the business, and certainly the last 18 years, and Sandler and now Piper Sandler has done its part to try to further accentuate that consolidation. It will continue, but not for a while. There is little to no M&A discussion going on because there's, you know, it's just not a focus to anybody right now. It will when we get out of it, and I don't know whether that will be in 3 months, 6 months. You know, you tell me when we're going to have a vaccine. You tell me when people will go back to work, and that's why I think this notion of people that were surprised the other day when Dan Druckenmiller said there's not going to be a V-shaped recovery. Well, obviously there's not going to be a V-shaped recovery, and until you start to get people back to work, and still you see the economy functioning, they're getting more of an answer to what the real credit issues are going to be, there won't be much M&A discussion. There will be a lot of discussion on preferreds, those type of corporate finance functions are going to be very active, and banks will bolster their balance sheet with that. I think there'll be not so much straight equity raised, and then before you see that, you'll see them banks cut their dividends, which is another, which the banks were in very good shape going into this, and they're in much better shape than where they were in '08. But it's going to be a while before we see a healthy M&A market return.
And that's the time, I suppose, for the likes of you to be looking around. It's also the time for certain banks to be raising cash. Obviously, we saw PNC Financial selling all of its BlackRock stake. The thinking is it's preparing to buy basically any smaller competitor or even non-competitor. Can you give us any kind of an idea of what might look good? A horizontal kind of deal, a vertical kind of deal, potentially even?
Well, I think there's a variety of things that can look good. I mean, I think the CEO was on record back in 18 to say, you know, when banks get below book, you know, then come talk to me. And I think he's also said that he'd look to do a deal comparable to the Nat City deal that was done, that they did in '08. In fact, Sandler was involved in the advice to that deal. And so I think that it's, if you look at it on a relative basis, where financial stocks have gone versus where he was able to liquidate his equity position, I think makes a lot of sense. It bolsters his capital. He's going to be in a position to look at a variety of banks and possibly finance type of companies. And I don't think that they'll move that quickly. I think that this thing is going to be a longer slog than people think. I think having capital and not worrying about earnings, which is sort of what this transaction looks like to me, is the right strategy for now in the next several months. And then we'll see. And if this is a much longer, more difficult slog than people think, there may be greater opportunities for him, and he'll be opportunistic. But I think it makes a lot of sense. I think that there are going to be a lot of opportunities over the next 3 to 6 months, and I don't think it's something he has to do immediately. But he'll certainly be ready to act.
Jimmy, one question on the richness of the stock market. Given all that you've said and your obvious outlook, along with that of many investors, why are equities so rich right now?
Well, the Fed can push the stock market around. It has a harder time with the real economy, and that's where the issue is. So, this notion of, the Fed's got your back, just pin your ears back and buy stuff, that's dangerous, because, they can provide some liquidity relief, and they can provide a lot. But at some point in time, the real economy has got to come back. And I don't know that many business models that operate real effectively with zero revenue for the next X amount of months.
All right, Jimmy.
We have 40 million people. Go ahead.
Well,
40 million people out of work. How many will come back? And those are real issues. And I think that the stock market's probably ahead of itself in certain places.
Okay, and I'd love to press you more on it, but I do want to ask you about this match coming up. It's the match revisited, if you like. It's a bit bigger than the very first match between Tiger and Phil. Basically, I suppose what everybody wants to know is who wins. Where do you put your money?
Well, I know, Vonnie, you probably have the Irishman in mind, and I root for him every week. But I'm going with the underdogs. I think Matt Wolff and Ricky Fowler are going to surprise some people. Ricky's won the pro member 3 times. Rory's won it once. And I think the young guys are probably practicing a little harder than the old veterans. And I think they're going to. I would go with I'd go with the wider odds with the younger guys.
I don't know. You can't not play older veterans,
I haven't won
Jimmy.
many golf bets.
Jimmy, very quickly, obviously golf is the first thing to come back. It's the first sport where you can socially distance, and Seminole, I'm sure, has been the first to reap some rewards. What do you see for the sporting industry going forward, and for just reopening the economy in general? Will it be easy?
No, it's not going to be easy, and it's going to be very jagged, and you have different states saying different things. But the first thing I think we've got to, well, I'm not a doctor, okay, and I'm not a lawyer, so giving those 2 caveats, we have got to get people back to work. We've got to get kids back to school. We've got to basically say, okay, let's look at the people that are most vulnerable. Are you of an age like mine or older? Are you overweight? Do you have respiratory issues? And those people need to be really, really careful and sequestered, and they need to work from home, and they need to, they need, companies and need to be respectful of that and help them along the way. But they need to really take care of themselves. But the notion that we're not going to open the schools in California for a year, I just don't see that as being the right answer. Now, I'm not, maybe there's things I don't know, but I just think we have to get people back to school, and we have to face this and do it as safely as possible. But the longer this lasts, when people thought, okay, we could just wait around for a vaccine, the devastation that will be done and is being done, and particularly the further you go down the economic scale, the more, I think the cure could be far, far worse than the problem. And I don't mean to be insensitive to it. I am not a doctor, but we have got to get people back to work. And I think whether it's Ohio or Georgia, they seem to be taking the right steps forward. And I think we have to be very careful, this being a political football, and it's really unfortunate it's an election year, because we need to come together and figure this out.
Jamie, just from the buy-side perspective, really curious about how the pandemic and the expected massive budget deficits is changing the way that you're thinking about credit selection as you look across what has now become sort of a vastly different environment.
Great to speak to you, Taylor. I think you have to completely rethink how you approach the market right now. Quality is the thing that is absolutely going to win out. So focusing on the highest quality bonds, because look, in an economy like this, no bond, no credit across fixed income is going to be immune from credit pressure. So what we're doing at Neuberger Berman is going back and looking at our existing investments and also thinking about new ones and saying, how do we re-underwrite them for this new environment? So I think quality is the way to go right now. And what's interesting, if you look at 10-year high-quality munis, they're yielding almost 170% of treasuries pre-tax. I think when you see yields like that, despite potential volatility, that's going to be an appealing proposition for a lot of investors.
And are you able to get the yields that you just mentioned that, frankly, we haven't been able to see these in years in the muni market in the highest quality, like you mentioned, a AAA, a AA, or are you going down a little bit to the highest or the lowest quality, I should say, still, though, within the investment grade spectrum?
Yeah, I think, look, the whole market has repriced, and to your point, Taylor, the lower quality investment grade bonds spreads have moved out a lot. I think you have to be cautious there. You have to have the right type of investor or vehicle to play in that part of the market. But I think for most individuals, if you just there are a lot of unknowns right now. If you just play the quality parts of the market, you can find those yields and those ratios that I just described. It may take a little longer to get invested, but I think we're in a world right now where cash is king, and if you just really, really play it cautiously, I think investors can have a really good outcome in this market.
Within the corporate bond market, Jamie, fallen angels has become a real risk. You see some of the BBBs be downgraded into the junk territory. Is that to a risk that you see in the muni market?
Yeah, if you look at the BBB part of the market, obviously Illinois is the big name in there, and then there's a lot of healthcare credits. Certainly a possibility that you could see some names in that category move down. I think the good news about muni credit quality is it tends to move in a bit more of an incremental manner, and so it gives investors time to assess and decide if they want to keep holding bonds. Illinois is an interesting one. They're in the market today. Again, not for everybody, but when you're talking about yields that are pushing up close to 6%, that is a lot of compensation for a state-level credit. So it really comes down to investors' overall risk tolerance and whether they think they're, getting paid appropriately for a ride on some of those names, which may be a bit more bumpy.
Jamie, finally, just about 30 seconds here. How is retail sentiment? You've seen inflows now come back to the market. Is that a healthy sign?
I think it's a very healthy sign. We have a thesis here that when things calm down, there is going to be a global surge for high quality yield. Munis are a great asset class to fit that bill. And I think for investors that want to hunker down a little bit, play it safe with a big part of their asset allocation, munis really, really work well, and that's why you're seeing retail sentiment improve so much.
How do you deal with each country trying to reopen on its own timeline, and yet a European Union and a European Commission that's trying to come up with broad guidelines for every country?
Bonnie, you should know that actually all the member states would like some guidance from the European Union, from Brussels, because we had experienced when the lockdowns starting to loom that the lack of coordination brought a lot of congestion and issues across borders. So now everyone is looking to us and say, okay, what rules should they put in place when we are going to open up? But the decision, the ultimate decision, because everyone is asking when, it relies with the member states, and that is because the epidemiological situation in each member state, it is so different. So it is up to national authorities, especially the health one, under the guidance from the European Center for Disease Control, to decide when they are opening up and for what destinations are they going to open up. What I can do and we are doing is say, okay, when you open up, these are the rules you should put in place for your transport modes so that people will feel safe to travel by plane or train or buses or whatever. And of course it is a no-brainer, but it's good to have in place coherent and equivalent rules all over the Europe, because we are a single market and we really want to have the same rules in place all over member states.
And many of your countries depend to a large extent on tourism. It makes up a good proportion of GDP, depending on what country we're talking about, from Greece to Italy to Spain and so on. How much of the 2020 summer season do you think could possibly be salvaged in tourism?
Well, you know how it is, European Union. We are so different, actually. So, of course, there are countries in which the epidemiological situation is not that bad, and they are also touristic destinations, and they would be more eager to open up. But there are others, again, touristical destination in which the situation is not quite stable yet. So I would say there is a difference between member states regarding the speed they would like to open up. But I think we are going to witness an opening this summer, because I have noticed, I have witnessed already there is a slow start in a reopening destination, for example, for air flights. And I think with our recommendations put forward today in what kind of at least minimal rules to be observed for the hotels, for transport modes, some will be more encouraged to open up for tourism purposes.
Commissioner, how concerned are you and your colleagues about a resurgence of the coronavirus if you do indeed lift restrictions or allow countries to continue with their restriction lifting?
Well, here it's hard to say. Of course, we are worried overall with the situation, and the fact that we do not have a vaccine or a treatment puts a lot of burden on the decisions to be taken. By the other hand, we are observing what is going on, how things are evolving, and until, again, we have a vaccine or a treatment, I think we have to learn to live with the virus. We have to learn to travel with the virus. So while for some other purposes we have learned to observe more security features, if you think at yourself at how a travel by plane looks nowadays and how it looked 20 years ago, it is such a much more difference. But I think with some rules in place to limit and minimize the risks, people will learn how to protect themselves and continue to do their economic activities or the travel or the leisure leisure activities with more precaution, and I think it's a learning exercise.
Right, but
So I would say that first we'll learn to live with it, and then at some point we can think of going to more freedom in how we relate ourselves to this issue.
the problem with learning to live with it, Commissioner, is that a lot of people don't get to live with it, right? And so I'm curious about transportation. There are a lot of proposals going around, and your roadmap talks about distancing practices on planes, trains, and ships, including, distance between passengers where feasible. But if these vessels have air conditioning, does it matter if the middle seat is empty? Does it matter if airlines leave a row empty? Aren't those passengers putting themselves at the same risk as if they were on a full airplane?
Well, when we developed these guidelines, you should know that we spoke with all stakeholders, including the industry which is producing the aircrafts or transport vehicles, and we try to understood and we discussed with experts how are the features inside of these modes and what would be necessary. That's why in the end we are saying wear a mask. Wear a mask, use your disinfectant for hands. Aircrafts are a bit different from the other transport vehicles because in aircrafts, due to their long history in providing safety features on board, we have a very strong air filtering system, hospital grade. We have these air flows vertical for air conditioning, which differentiates them a bit from other modes. But nevertheless, keep a distance, wear your mask. I would say first wear your mask,
Yes.
and then when possible keep the distance.
I just don't see how you're not going to have some kind of impact from COVID, considering that a large part of your business, say, comes from the U.S. How do you see then the virus playing out?
Well, our portfolio of medicine is life-saving medicine, so we are treating very severe disease, and you cannot stop the treatment for the disease, so they are really life-saving medicines, and they are not linked to elective surgery. So I think there will be some impact in some product, but overall we feel confident that over time our medicine will still be used by patients.
But unless I'm wrong, it seems like one of your main drugs is for Crohn's disease, which isn't necessarily life-threatening, and your other is for a plasma business, and that basically means it's an infusion, and I have a hard time thinking that that's still going to be safe or people are going to be okay doing that in the short term.
Well, when you have Crohn's disease, you don't want to have a crisis of Crohn's disease. I mean, you want to continue to take your treatment. This is not life-threatening, but this is very bad. So, of course, getting an infusion is more complicated, but over time you need to get your treatment. So I think there will be some short-term impact, but overall we are assessing our overall portfolio. We feel confident about the guidance that we gave today. When it comes to the immunoglobulins treatment, for example, you are treating primary immunodeficiency, for example, which can be life-threatening. So again, I think when the disease you are treating is very, very severe, over time there will be people will get access to that treatment.
Then let's go to stay with plasma for a second. You're dealing with your plasma-derived therapy for COVID-19. Analysts have noted before that sourcing the plasma from recovered patients can be a problem, but you seem pretty optimistic in your trajectory for it. How are you moving so quickly?
So we are developing a treatment against the coronavirus, and that's very promising. We have co-created an alliance with other companies, which is quite unique, so that we can pool faster our resources and move faster. And in fact, today we are starting the manufacturing of the clinical trial batch, and we will be able to start the clinical trial in July. So I think it's moving very, very fast. Of course, we'll have to convince people to donate their plasma, and this is something we are working on.
What's the biggest hurdle for that so far?
Well, I think that we'll have to demonstrate the efficacy and how many patients a donor can save. I think that would be very important to demonstrate. And then it's about convincing people that donating their plasma, if they have recovered from a coronavirus infection, is the right thing to do. Because there might be treatment available, but we will come quite fast, and there will be always a need for other therapies.
Can you give us a sense of if you get the right kind of plasma and it works, etc., how quickly you can scale it up?
Well, again, it depends on mainly two factors. One, the number of donors, and we need to convince people to donate. And then it will depend on the ratio between donors and patients. So how many patients can donation will treat? And we don't know this ratio today. It will depend on the clinical trial result that we will start this summer.
Are you having any issues? I mean, you mentioned, of course, having people to actually get the plasma from, but aside from that, for your drugs currently, are you having any issues in supply chains?
No, we have been able to maintain our supply chain. We have started our own crisis management back in January. We have an in-house infectious disease expert, and we have been able to keep our employees safe, but also to maintain our supply so far.
At what point, what are the signs that you look for that shows you that there are cracks that are emerging? Where do you think they might be?
Well, I think healthcare systems have been paralyzed by the current crisis. So, of course, many surgeries have been on hold, but we don't depend so much on that. Even doctor visits have been stopped or greatly reduced. So, eventually, it will have to restart because, again, some patients need their treatment, and so we are monitoring that on a weekly basis. And I think we are entering now in many countries a new phase where the activity will reopen, but the virus is still there. So I think the society will have to find a balance between activity, but not recreating a spike. And this is something that we'll have to monitor very closely.
Which kind of brings me to the whole vaccine point. Now, Takeda is not working with the vaccine, but when you were at Glaxo, you used to run the vaccine unit. Do you have any insight, any thoughts on sort of how quickly we can really ramp up scale a vaccine here?
Well, first, not all the vaccines candidates will succeed. I think we should be very clear on that. There is always the risk of lack of efficacy or safety signals. So I think I'm convinced that a few will succeed, but not all of them. And then the scalability of the manufacturing is a very complex endeavor, and that will take time. So I think very often people make a mistake between the approval, for example, of the vaccines, but the availability of the vaccine is another matter, and that will take time. And so when we are talking about 2021, we are talking about, in many cases, the approvability of the vaccines, and it might take 1 or 2 years to scale up the manufacturing.
Oh, not news people want to hear of that, I am sure. Then take me inside what Takeda is doing in terms of your workforce. Have you made any sort of long-term shifts in how you structure the business, how you're hiring, what your medical centers look like, etc.?
Well, back in early January, we started to really keep our employees safe, work from home, stop visiting doctors very rapidly in many countries. So we have been successful at that, keeping our manufacturing site running with alternative shift. So now what we are working on is the next phase, which is how to regain some activity, but it will never be back as before because you need to keep the physical distancing, for example, so there is no way people can go back to the office. I think the virtual way we work will stay there for a long time, and our thinking and my thinking is that I think it will accelerate a shift toward a new way of working, which in fact we should embrace for the long term. And I think this is an opportunity for a company like us, but also probably for the society as a whole.
What does that mean? Does that mean sort of renting less office space, keeping more people at home, hiring different types of people?
Yeah, certainly it would be, people working more from home, working more in a virtual way, perhaps having a mix between, face-to-face physical organization, but virtual. Certainly, I think many people are discovering that working at home is not bad. It's very every person is reacting differently, so I think it will change a lot how we work. On the field we have medical doctors, we have medical representatives meeting doctors. It will change the way we also work with healthcare professionals. I think that we will never come back to where it was before.
Oh, really interesting. And then my last question for you from your CEO suite: do you see any sort of supply chain movement, return to protectionism, more nationalism, sourcing closer to home activities, since you are so diverse?
I think in our case, we have a very balanced supply chain, and also we never rely on one source. And so we have a dual sourcing strategy. So I think the trend would be much more risk management. So the world where you could rely on one source in whatever country is over because of the geopolitical tension which is existing and might increase in the future. So when you think about risk management and how you de-risk your dependence in your supply chain, I think this is where the trend will be.
Lauren, I want you to talk about Dr. Fauci, the virologist, speaking with the ophthalmologist Rand Paul yesterday of Kentucky. What did you take away from the two doctors of different fields, going at it over infectious disease?
I think Dr. Fauci is, as he's demonstrated repeatedly, a steadfast expert. And so, as an infectious disease physician, I think we have to trust that his path forward and his vision for how we can safely reopen the country is the most important path to follow. We have to be safe, we have to be steadfast, and we have to be. This is the time when we need that voice of leadership.
Where, Lauren, good morning from London. Where can you find a voice of leadership? Is there anyone and anything when you look at testing, when you look at, some of the things that we know about what this actually virus does, that you would trust?
Yeah, I think that's one of our biggest challenges. In that discussion with Dr. Fauci and Dr. Paul, and when Dr. Fauci called him cavalier for arguing that schools should be reopened, I think we saw that leadership gap. Unfortunately, I don't feel like we have a strong national leadership front that we can go to for support. Normally, you would expect that from the CDC, and the CDC has been sidelined here. I think Dr. Fauci is our best bet for who we can follow and how we can safely, how we can take advice safely. But that conversation yesterday just demonstrated that we really still have that need.
So, Jan, can you give me your base case then for what happens to growth here in the U.S. and kind of like the letter that you're attaching to that, the swoosh, the L, the U, the V, etc.?
I think the whole letter discussion is problematic because different people look at levels or year-on-year changes or quarter-on-quarter changes, and depending on what you focus on, you get a different letter. I mean, our expectation is that Q2 sees a very deep decline. We're at minus 39% quarter-on-quarter annualized, and then we have strong sequential growth in the second half, plus 29 in Q3, plus 11 in Q4. So from that perspective, it's a fairly rapid recovery. That said, if you look at the year-on-year rates, which might give you a better sense of the underlying trend, we're at almost minus 13% in the second quarter, and still a decline of more than 5% year-on-year in the fourth quarter. So that's important because minus 5.4% in the fourth quarter would actually be the weakest number in post-war history on a year-on-year basis if it weren't for Q2 and Q3 of this year. So I would say it's a partial recovery, faster in some sectors than in others. I think the industrial sector and construction are probably going to recover more quickly than consumer services that involve a lot of face-to-face interaction. That's going to be a disrupted sector, I think, until basically we found much better medical options, probably a vaccine, and that still seems like it's a ways off.
Yeah, it does. And so then how much do you model we need to see from the government in terms of stimulus, backstopping, however you want to label it as, to help support the economy to get to your forecasts?
So I think we need additional fiscal support. We're building in a phase 4, which would deliver another $500 to $600 billion of stimulus in 2020. And probably additional numbers beyond that for 2021 that are probably well above that, another trillion and a half. That's our expectation, that we will get, in particular, a significant amount of support for state and local governments. We're not assuming quite as much as what was in the House package that was passed yesterday. They had about $1 trillion. We don't think it's going to be as big as that, but we do think there will be more. We also think that the expanded unemployment benefits are going to be partially extended, and we're expecting another round of rebates to households. So, substantial amount of additional help to build on the effort that's already been made, which has been, very, very substantial. I mean, we have seen a very large amount of fiscal support, both in absolute terms and relative to other countries that have been hit by the same shock. So that's clearly one of the ways in which the U.S. is maybe better placed than other places for an economic recovery. There are also ways in which the U.S. has bigger problems. The virus situation, if you look at the new number, the confirmed numbers, active numbers, while improving, that is not improving as quickly as it is in some other countries. But on the fiscal side, the U.S. has definitely done more.
Going forward, Jan, when we get through this, given what you know right now, how do you see the economy developing? We came out of the 2008-2009 great financial crisis and recession with the growth of a potential of about 2%, very slow wage growth. Is that what we're looking at now? Are we kind of going to see an economy when we come back with lots of bankruptcies, lots of people out of work for many, many years, no income growth? How bad is it going to be?
So I think we'll see much faster growth than coming out of the 2008 recession, because it's a very different kind of downturn. We shut the economy down in part in order to get on top of the virus, and as the medical situation improves, we are going to be able to bring back economic activity, in a measured fashion. But that measured fashion is still going to mean much more rapid growth than what you have seen in coming out of past recessions. I also think that over time, people are going to learn, we as a society are going to learn, what types of activity we can bring back in a way that is compatible with continued virus control, and what types of activity we have to stay away from for a longer period of time. There's still a lot of information that has not really yet been revealed. One example is school closings, and you look at different places around the world. The experts disagree on the role of children in spreading the virus, and we're getting a lot more data on that, and we're going to be finding out from the experience of, for example, Denmark and Germany and Czech Republic, Austria, places that have brought back schools for different age groups. So I do think that over time we will adapt, but it's still going to be with us for several years, no question.
For more on Deutsche Bank, I'm joined now by Bloomberg's Jan Patrick. Barnard joins me now from Frankfurt. What did you make of the job cut announcement?
Hi, good morning there. Yeah, well, I mean, it feels a little bit weird because the story is basically so old with all the virus going around. It's kind of strange that we go back to business, basically. But in general, Deutsche Bank still has a lot of work to do, and we should not forget that with all the virus trouble adding up to that. And their main objective is to save costs, and the only thing to really get those costs down is jobs. So I'm not very surprised that they are now highlighting that they have to go back to it.
Do you expect pushback from the government at all, and what can they do about it, particularly when every other bank has announced a freeze on any kind of layoffs or work changes?
Sure, I guess it depends a little bit on the timing that they will lay out later. So we don't know the details when they will resume exactly and to what scale and in which areas. And of course, it's a delicate topic right now with everybody trying to keep the economy as a whole together. And if you then have one major lender going after jobs here, that's an issue. On the other hand, the government is very well aware that the bank needs to do something to keep its business healthy and keep its balance sheet healthy. So they can't do much about that.
What else does Deutsche Bank have to do, other levers that they get to pull?
Well, I guess they're still looking at
Как он так
where they
совпадает, блин, с
might not want to
точностью?
compete or can't compete with the competition. They cut already a little bit on that front. And they still want to go bigger in Germany for corporate lending, and maybe that's actually a good time right now. There will be a demand for lots of loans, and they just have to make sure that they don't get too many bad apples in their basket.
Are we going to revive the conversation of Commerzbank Deutsche Bank combination? Is that going to come to the fore as we sort of struggle to get out of all of this?
Well, that's a very good question, and I mean we had very serious talks between them, and I'm certain that they look close to this merger possible. But the thing is, it's not easy, and it must make sense on an economic basis. It came to the conclusion that it doesn't, and I don't see how that has changed since then.
What do you think Jay Powell can or would say about it? Obviously, we're in a disinflationary period right now, and there are questions about whether we're going to hit deflation and how the Fed would have to react, and then whether all this money that's going into the economy is down a road in a year or two going to produce inflation that they'll have to react to.
Well, my own view is that right now, of course, many prices are falling, other prices are rising sharply, but on net, if you look at the consumer price index for April, it was an extremely weak reading, biggest decline ever in the core CPI. The current environment is, of course, highly disrupted. So you could say that at the moment, inflation is just very difficult to measure. How do you measure, for example, the price of sit-down restaurant meals when you can't have a sit-down restaurant meal in many parts of the country at any price? I think what's more relevant is what's the outlook for inflation once you get beyond this immediate crisis. Our view is that at that point, the economy is going to be normalizing in a lot of ways, but we're still going to have a lot of slack in the labor market and in the economy more broadly. There will be a lot of unused capacity, a lot of people trying to find a job, and I think that's going to be weighing on inflation, keeping inflation below the target. So I think for me, that really trumps the aggressive policy support, and I think the Fed's view is going to be broadly similar.
Well, I guess the follow-on to that, though, is with all the money going into the economy, does it find its way into the markets? Do we end up next year, perhaps, with a bubble somewhere?
Well, I mean, that's, I think, always a possibility that, financial markets, do things that could create instability down the road. I don't think that that's the main focus at the moment, though. I think at the moment the focus is really on stabilization and bringing the economy back to normal. And if you are much closer to normal and you feel that there is an imbalance in the financial markets that has developed, then maybe that's a debate for 2021 to rein things back in. At the moment, I don't think that's a major concern.
This marks, this month, the 10-year anniversary of the flash crash, which saw $1 trillion wiped off U.S. stock markets in less than a half an hour and made me lose my hair. The markets recovered, but for years afterwards, nobody was sure exactly what had happened. Glitches, high-frequency traders, and old-fashioned fat fingers were initially blamed. Then, in 2015, a London-based point-and-click trader, Navinder Sario, was arrested for market manipulation. But the question was, how did a single man trading financial markets from his bedroom in his parents' basement cause such a massive and abrupt crash? Bloomberg's financial investigations reporter Liam Vaughn has made the so-called Hound of Hounslow the subject of his book, Flash Crash, and it's out tomorrow. It's also being turned into a film with Slumdog Millionaire actor Dev Patel playing Sairo. So Liam, first of all, tell me, what do we know about how this really happened? How much is myth and how much is real?
Without wanting to give the ending of the book away, the flash crash was this kind of very dramatic, very mysterious event in 2010 in which the bottom just miraculously sort of fell out of the market. It was already a highly volatile day. We're in the midst of the Eurozone crisis, and suddenly the market around the world started plummeting like a runaway elevator. And originally there was an investigation by the US authorities, and they kind of settled on various explanations, including the rise of high-frequency trading and some other kind of big trades that were placed by pension funds. And then fast forward 5 years, and the FBI knock on a guy's door, very modest house in Hounslow, underneath the flight path of Heathrow, and arrest a guy called Navinder Singh Sarao, who's now, achieved almost mythical status. Sarao was, despite his kind of very humble location and the way that he lived his life, was actually a huge trader. For 5 years, he was amongst the leading traders on the S&P 500, which is one of the biggest futures markets in the world. And he was trading bigger size than Goldman Sachs and bigger than most hedge funds. So don't think that just because he was trading in his bedroom, he wasn't, trading significant size. That said, the idea that he, single-handedly could have had a major effect on the markets that day is really a matter of dispute, and I get into that in the book.
And it's really interesting, isn't it, with so many people possibly watching this trading in their bedrooms, or at least in their homes, Liam, the strange times we find ourselves in. Tell me a bit about how Nav, as he's known, Navinder, how he managed to escape jail time, essentially. He proved incredibly useful to the US authorities.
Yeah, so Nav was arrested in 2015, and at that point in time, he was charged with 22 criminal counts by the US Department of Justice, felony counts. So, the cumulative prison sentence for that is 380 years. When they knocked on his door, all they really knew about him is that he was worth $70 million, that he'd set up various offshore vehicles and bank accounts, and that he was, in his kind of interactions with the exchange, sometimes quite aggressive, so they didn't really know what to expect. And then they knock on the door and, go up to his bedroom, and it's literally a single bed with a tiger stuffed toy on it and a load of computer games and paraphernalia. And so what eventually happens is that they get to know Nav, and firstly, they realise just how incredibly gifted he is. And at that point in time, the US authorities sort of real knowledge and understanding of, you know, the dark arts of electronics markets was pretty rudimentary. And so NAV was able to sit there, and amazingly, one of the sort of nuggets in the book is that NAV felt like the markets were being rigged and being cheated by HFT firms, so he started videoing himself trading, if you can believe that. So when they arrested him, they found this camcorder, and on it is all this footage of him basically breaking the law. So it didn't help his legal case, but it meant that he had hours and hours of footage, which he then sat down with the FBI and talked through, you know, how the markets work and what he was doing and what other people were doing, which proved incredibly helpful. And off the back of that, they built, you know, dozens of other spoofing cases.
But the bottom line, Liam, is that he's somewhat of a savant, right? He's at very least, a genius. I wonder what he's doing now. Is this guy making bank, or is he just wasting everybody on a Call of Duty Twitch stream?
Well, one of the tragic elements of the story is that because Nav never wanted to tell his family and friends about the money, instead what he did is he sort of entrusted it to a series of so-called investment advisors who essentially, you know, promised him that they could give him guaranteed returns of like 11% a year. Ultimately, he gets arrested, needs to make bail. He's on paper worth tens of millions of dollars, but his bail set at 5 million quid, so it should be easy for him. The lawyers quickly find out that they can't get hold of the money. So unfortunately, even though Nav made all this money, he was ultimately taken for a ride, and that's kind of one of the big twists, you know, one of the big elements of the story is that this so-called genius criminal mastermind was himself a victim of sort of Ponzi schemers. So at the moment he's completely broke and isn't actually allowed to trade. He's still under house arrest. That expires in January. But, you know, I spoke to various HFT firms and big hedge funds, and they all said that they would hire him in a flash. So maybe he's got a career on Wall Street after all.
So how real is this standoff then between the ECB and the German court?
Well, what is really starting to look now is, as of the European Central Bank, which almost just collateral damage in this fight, it really does look like this is a standoff between the national courts and the ECJ. This is about whether you should follow your national legislation or whether European institutions should be guided through different criteria. And this we have seen play out before with other countries over other issues, and it does look like in Germany this is something that really is about accountability. Who is responsible and who should, well, Germany in this case, but also the ECB respond to.
So aren't we hearing, though, from members of the ECB that they don't want to make that big a deal about this, that they're willing to just put together a presentation that should only take a few hours and send it to the German court?
Yes, and this is what we've been reported now for, you know, almost a week, kind of saying members of the ECB actually believe that they could respond to these questions quickly, but there is an internal debate as to should the ECB provide the answers to a national court, even though really it doesn't have that responsibility over the ECB. This is not a court that actually has that kind of power, or should it be done through the German Central Bank? And then I would also point that if you look at the key European institutions at this point, including von der Leyen, who is German and would know the Constitution very well, also put out a statement over the weekend saying, let's just keep it very clear, the institutions that are EU should be held accountable by the European Court of Justice. They don't respond to anyone else. And if you try to not do that, we could actually look at whether you, as a country, are breaking the law, essentially.
Can I ask you about the 25% number that you put out today, or 20 to 25%? Give me a sense of the visibility that you have at the moment. What are you basing that kind of assessment on?
Well, we know, of course, the first quarter our volumes were down 3.5%. We are halfway into the second quarter now, and we've had a volume development consistent with this 20 to 25% drop in volumes. It's presumably the worst quarter this year, given that it's after China was closed down for several weeks after Chinese New Year, and now of course we have a demand slump in the West. So that's what's driving the poor outlook for volumes.
What kind of recovery trajectory are you expecting, Soren?
Look, I think that question is probably not a business leader in the world that wouldn't like to know the exact answer to that. But we are, I think, like many others, expecting some kind of U-shaped recovery. Right now, we believe we are at the bottom, and that we will probably be, here for a while. But then, in the third quarter, the fourth quarter, we should start to see some recovery. I think it's also important for me to say that we have had, first quarter where we also saw decline in volumes, but actually our earnings were up 23% year on year. So we're managing the situation by taking cost out and adjusting our network and focusing on cash flow.
So you focus on the self-help measures. What does the pattern of global trade look like as affected by the pandemic? Soren, you've talked to us about the level of volume reduction that you expect to see, but do you see goods moving to different places? Have we learned anything from the data about from China, for example, and the fact that they're ahead of everybody else?
Our long-term expectation is that we will get back to seeing global trade grow more or less in line with global GDP. Obviously, there are lots of discussions going on now as to how to design supply chains, not only for cost, but also for redundancy and resilience. And I'm sure that you'll see many of our customers moving away from single source sourcing and the like. And for certain product categories, it might also be that such as personal protection equipment, that actually you will see more regional supply chains. But we doubt that there will be a wholesale shift to local supply chains, because the problems we've had in the supply chain during the pandemic has really not been related to distance.
What kind of bankruptcies have you seen, or what kind of bankruptcies do you expect? Right now, that's, I think, one of the big worries of financial markets, that you start to get a cascade, maybe smaller players that infect medium-sized players and then larger players.
So, if you mean on the carrier side, then certainly, we are not in a situation where every single carrier out there have a strong balance sheet. Rather the opposite. So who knows what will happen? I know, for as far as Maersk is concerned, we have come into this situation with quite a strong balance sheet. We have raised more funding. We have more than $9 billion of liquidity right now, and on the back of a good first quarter, we actually feel that we are very well placed to weather this storm.
And talking about how various carriers are positioned differently going into this, Soren, do you see this as an opportunity to do some deals then, to do some M&A if others are more precariously positioned?
I don't think so for AP Moller Maersk. I mean, we acquired Hamburg Süd at the end of 2017. We have almost 20% global market share. So we believe we have the size and the scale on the carrier side that we need to have to be competitive. Our focus as far as acquisitions will be entirely on the land side, so land side logistics and possibly also container to ports, and we will be looking for those opportunities.
I was thinking more of customers, Soren. How many customers do you see that aren't just delaying deliveries, but simply won't be there anymore? Is that a concern?
Oh, absolutely. I think that as all container carriers, including Maersk, are quite heavily exposed to retail customers, and we have started to see retail customers, some prominent names in the U.S. filing
Chapter 11 and in some cases bankruptcy. So that is of course a concern. I have to say though that on an individual level, there's not one single customer that is very large for us. So therefore the exposure to the individual account is not that much for us. But of course, if you have whole, if you will, industries falling over, then it will be something that we can feel as well.
You mentioned some of the self-help measures you can take around the balance sheet, Soren. What about the other tough decisions that need to be made around headcount? Is that something you're considering acting on?
Well, we have so far, focused on if you will, the little bit easier things like hiring freeze, like furloughing people, and the like, and if we believe that we can get through through this, at least for now, with those types of measures, as long as we continue to believe in a U-shaped recovery, then we're going to need our people once we start to get to the recovery.
Your guidance for the year, $2.5 billion in terms of loan losses. Where will the majority of that pain come from? Good morning.
Yes, good morning. We booked 1.1 billion of impairments alongside our Q1 results this morning. And as you say, we've given an outlook for the full year of 2.5 billion euros. And that reflects possible impairments across our book. We're very largely exposed to the Netherlands. 80% of our business is in the Netherlands, where we have a big business in the small and medium-sized enterprise sector. We also have a global business, oil and gas, mentions, shipping, trading, commodity finance. So we're well diversified. So it's no particular sector, but we are, we're cautious on the outlook given the circumstances, and we think it's helpful to give a guide of where we think the year will end up, around 2.5 billion. I think it's important to recognise how strong the bank is. Our capital position over 17% common equity tier 1. So our buffer is a little over 7% over capital regulatory requirements. So we're really quite comfortable from a balance sheet perspective going into the COVID situation.
Clifford, great to have you.